listen, listen, people, we got to stop spending. We are on an unsustainable fiscal path. It is going so far up and to the right, meaning debt to GDP. The amount of debt it takes for each unit of productivity is going parabolic. We've got to stop.
James Lavish begins by outlining what it means to truly operate on a Bitcoin standard. For him and his firm, it means holding their treasury in Bitcoin, not dollars. Every single investment decision is then weighed against Bitcoin itself. If Bitcoin is trading at 17,000, 18,000, or 19,000, the question becomes, is this investment better on a risk-adjusted basis than simply holding Bitcoin?
In the Bitcoin universe. And so we're on a Bitcoin standard. That means that we keep our treasury in Bitcoin, not dollars. And every single investment we make is weighed against the risk reward of Bitcoin itself at that period of time, at that point in time. So Bitcoin at $17,000, $18,000, $19,000, it was really difficult to get into our portfolio. We only had a handful of investments because we were like, no, we've just got to, let's pay close attention to Bitcoin, and because that's got the best risk reward here, even better than the miners at the time when there were some fluctuations there. But we started out. We got into MicroStrategy pretty quickly. We understood that what their strategy was and how they were going to approach it, which has evolved quite a bit over the last couple of years. Because so many of these things, you're in Bitcoin, which is a completely new technology, completely new world, completely new market. How can you tell what the real market is for all of these companies? You can't just say the total addressable market is, $1 quadrillion. No, that's not really, that's not helpful. So we're just very careful now to weigh the risk reward against that Bitcoin treasury. If we're gonna make an investment in our portfolio, we feel it's got to have a better risk-adjusted return. That doesn't necessarily mean it will outpace Bitcoin, but it means that it will have a stronger return over the course of time, risk-adjusted. So it'll pull out some of that volatility, especially the downside volatility. Are they investing in just Bitcoin or in Bitcoin companies? So just straight Bitcoin, it should just be an allocation to portfolios, and it depends on what portfolio you're allocating it to. But a minimum of 2, 3, 4, 5% in my mind is necessary at this moment. The early stage companies or venture capital companies, and all that, whatever you're talking about, look, this industry has the same issue. It's not just the Silicon Valley startups. This has the same exact issue, maybe a higher failure rate, because it's such a new technology and everything's emerging and changing so rapidly. And I think that, one of our challenges and why we haven't done a ton of venture capital is because, we're trying to give returns to people that they'll be able to withdraw their money in 7 to 10 years, and have a great IRR over the course of that time. Now that means that we have to be careful about matching that timeline with the duration of a early stage investment. Bitcoin companies that are early stage that could have that 1,000x kind of return, or are you looking for exposure to Bitcoin and Bitcoin companies and that ecosystem to grow with that ecosystem? See technology grow with that ecosystem rather than catch a couple of high flyers, right? Venture firms they need the high flyers. They need some really good high flyers to unless they do something different than a typical venture capital firm and just put a bunch of money in Bitcoin, which is possible too, I suppose. The thing is, when you invest in a venture capital firm, you typically don't send all your money. I know some people who have done that, and I've actually got a friend who has got a fund at Yale who does that. But typically, you just have your capital calls. You identify investment, you do your research on the investment, due diligence, you negotiate out, then you do a capital call from your investors, and they send in a portion of money that would match that.
First, Bitcoin isn't just another asset. It's the base layer against which all other investments should be measured. On a Bitcoin standard, the hurdle rate is much higher, and very few assets can beat Bitcoin on a risk-adjusted basis. Second, while Bitcoin-related venture opportunities exist, the best allocation for most investors is simply Bitcoin itself. Chasing moonshots in early-stage startups carries enormous risk, while Bitcoin provides asymmetric upside with much lower operational uncertainty.
And they basically have put out these studies over the last number of years, and every single one of them is warning Congress. They're like, look, we are on an unsustainable fiscal path. Listen, people, we got to stop. Stop spending. We are on an unsustainable fiscal path. It is going so far up and to the right, meaning debt to GDP. The amount of debt it takes for each unit of productivity is going parabolic. We've got to stop. They're warning them about it. But Congress doesn't listen. They just keep spending. So that gets us to the third option. I believe in free markets, or at least as free as we can get them. Of course, nothing is free, and there's a lot of Cantillon effect, and there's plenty of there's plenty of self-dealing and all that going on. I mean, you see it anywhere from the banks to the Congress and all that. There's a lot of nepotism, all of that, but nothing's perfect. But, I do believe in free markets. Well, I would think of Bitcoin like digital gold. The difference is it's on-chain and it's perfectly auditable. Okay, you can see who owns what, as long as you know, if you have the know your customer aspect of it, whatever. This is why terrorist organizations are telling their donors or users don't give us Bitcoin, because they could see it. We don't want, it's all publicly viewable on chain. Anyway, perfectly auditable. So if you say that you have a certain amount of money in a wallet that is in escrow, for instance, for a transaction, you can see exactly what's in there on the time chain. You can't do that with gold. Gold is problematic. You have it. If you have physical gold that's stored in a vault somewhere, maybe in the Bank of England, maybe in Switzerland, then it might be like it happened to JP Morgan, $50 million worth of gold-plated nickel. You have to literally cut into the bar, or you do physical tests on it, chemical tests on it to see that it's real. Not with Bitcoin. You know exactly what it is. It's also so easily transferable. So these are all, and then of course the biggest thing is it's scarce. There's only 21 million Bitcoin that are ever going to be made. That's it. And so for people worrying that there's not enough Bitcoin to go around, well, each Bitcoin can be split into 100 million pennies. So imagine a bar of gold that's worth now $100,000 that can be split 100 million times. There's plenty of it to go around. I mean, all the gold in the world, from what I've heard, could fit under the Eiffel Tower. So look, there's plenty of Bitcoin to go around. Okay, and it could sustain all of the demand for it in transactions too. But here's the kicker. So now you're saying, well, why wouldn't somebody just build another Bitcoin? Well, like I said, it grew organically, so those nodes are decentralized. There's no one person who controls that network. Even Satoshi, if he came back, he can't do anything. So yeah, he's got 1 million Bitcoin, but he can't change that time chain and the governance of it. It's perfectly decentralized. It's like having, thousands and thousands and thousands and thousands of members on a board that, they're all incentivized to do the same thing, keep the network pure. So what about that network? Well, can't it just be hacked? Can't it just be broken? Well, the Bitcoin network is backed by all the miners and all the hash and all that powers the network.
Finally, Bitcoin is not gold 2.0. It is something much bigger. It is auditable, scarce, divisible, portable, and decentralized in a way no physical commodity can ever be. James Lavish's framework is simple, yet profound. Live on a Bitcoin standard, think in Bitcoin terms, and measure every investment against the world's hardest money. For those who understand this shift early, the generational opportunity is enormous.